Joining us now is the Motley Fool's Chief Investment Officer, Scott Phillips. Scott, hello, good to see you. As always, we've got some jitters happening now. You've got these problems, the outbreaks happening again in the UK. They may well be looking at a lockdown again. You've got outbreaks in Europe, and of course things are continuing to be very high when it comes to the US. So stock markets, locally anyway, might have a tough day today, right?
Very good morning. Yeah, that's certainly the expectation when it comes to, unfortunately, what we're expecting. The future's down about close enough to 1% among friends. That's a tough old fall, and we've already had some pretty tough falls. The market's at a 2.5 odd month low. So, yeah, we're in a situation, and this is, I've got to say, this is exactly what we should be expecting. So the first thing I'd say to people is just cool down a little bit. To some degree, we panicked in March. Market came back, and then expected everything would be perfect. And then over the last couple of months, we've seen that kind of back and forth of everything's going to be okay. Oh, no, maybe it's not. Maybe it is. Maybe it's not. That's what markets actually do, which is fine. But it's important to remember that's what they do, because it stops you being overreacting to what otherwise might be coming down the pike. Now, as you say, big case numbers in Europe, Ireland, have gone back to stage 4 lockdowns, I believe. There was just, again, the virus isn't gone. And so for those who thought this was the end of it or the vaccine was somehow around the corner, time for a reality check. It doesn't mean you shouldn't invest. It just means that that's what happens when exuberance takes over, or pessimism, by the way. And we may well be in the latter stage right now, because I still believe over the long term things get better. And so if you're overestimating or overemphasizing the short-term issues, you may well be also missing out on the long-term recovery. So it's one of those stories where you've got to deal with the short-term, but play the long game.
Well, okay, so what's the advice? Either to shut your portfolio down, turn the computer off and just leave it for a month or even two, or do you get bullish in this kind of situation? Do you look for more stocks that are losing value and get on them again?
Mate, I reckon that the latter is all well, either or both, right? So it depends on what sort of investor you are. If you're the sort of person who needs to just walk away from volatility, then yeah, turn the brokerage account off, go fishing, go shopping, go. If you're in Victoria, just stay home and exercise. But at least don't be tempted to jump on the brokerage account between 10 and 4. You've got to make sure that you don't let the market tell you what to do. Over the long term, I think you're exactly right. The market has never not failed to regain previous highs. Now, that means whenever we're below the last high, unless this is the first time ever in history, we don't get back to a previous high, there's money on the table to be taken off for those who are patient.
As long as you're in good companies, right?
Yeah, that's exactly right. So quality always matters. Or just a broad market ETF, if that's what you want to do. Just buy an ETF and let the market do its thing. But you're exactly right, mate. Rubbish companies will give you rubbish results, generally speaking. You might get lucky from time to time. Quality businesses will out over time. We've seen the likes of, even Harvey Norman yesterday, not exactly the investor's best friend, but sales up 30%. So, there's quality businesses. People have written Jerry Harvey's retail epitaph more times than I can count. About $1 for every time that had happened. I'd be sitting pretty. So, if you've got businesses that are performing, that are doing their thing, the markets, market will do what the market will do. The businesses themselves, though, will keep doing what they do. And that's important. If you focus on the business, not the share price, you're in a pretty good place.
Well, we've been reporting already this morning that it may well be a tough day specifically for bank stocks and oil stocks as well today, given what's going on overseas. HSBC, one of the big underperformers overnight. What's your view of all of that?
It's hard, isn't it? So but there's two things happening. The first is the global economic concerns that people have got are really going to hit oil prices, because oil really is a proxy for GDP. And to whatever extent the market worries about economic growth, oil gets hit, that hurts. And then banks similarly, because they've got massive amounts of debt, of course, on their books. That's what they do. They provide debt. So that's not unreasonable and not unexpected. When the economy slows, though, that's a problem. HSBC has got bigger issues, and some of our banks here at home are caught up in the same thing. There's been some new data released and leaked files that suggests that globally, banks have been involved in alleged in front of that, money laundering, and those things haven't been reported the way they should have been. Now, we know the Austrac investigations here have been going on and on and on. Westpac's been hit 2 or 3 times. There are concerns this is bigger than that again, and that some concerns raised by internal staff at these banks weren't being actioned, and that's allowed criminal syndicates to launder money right around the world, our banks and others, pretty much with abandon. And that's the real concern. If that comes to the fore, that becomes an issue, then you get another Austrac investigation likely, and potentially more fines, more clouds over the bank.
What's there to be positive about, just finally, Scott?
The long term. Stick with the long term. You know what? So here's what's positive about. Retail sales have been great. Jerry Harvey's sales yesterday, Harvey Norman, were fantastic. GDP is low. Unemployment that was coming down. Retail sales are good. We may well just spend ourselves out of this recession. Fingers crossed.